Hello and welcome back to Global Value. In today's video, we are going to be performing a fundamental stock analysis of Ford Motor Company, ticker symbol F. Ford just revealed their F-Series Super Duty, which they're unveiling as part of their next generation lineup. The F-Series Super Duty trucks are designed to boost Ford's commercial and software services businesses. Ford also just broke ground on its $5.6 billion battery and electric vehicle manufacturing campus, dubbed Blue Oval City, near Stanton, Tennessee, just this past week. However, a week ago, their CEO, Jim Farley, had warned investors that there are about $1 billion of unexpected supplier costs and part shortages that are affecting Ford in Q3 of this year, and that those supply shortages are likely to impact the company going forward. So that has potentially sowed some doubt amongst Ford investors. So even with Ford's recent mixed press, in today's video, we are going to be taking a look under the hood, diving into the fundamentals of Ford Motor Company to get a better sense of what's going on in the business holistically and try to understand whether Ford has what it takes to weather some of this macroeconomic uncertainty. So currently Ford is trading for $11.20 per share. Over the past year, they are down nearly 22%. Over 3 years, they're actually up at a rate of 9% compounded annually. Over 10 years, they're up at a rate of 3.5% compounded annually. And going back prior to the global financial crisis, almost 18 years ago, Ford shares are nearly perfectly flat. From a stock price perspective, Ford shareholders have not lost any money on paper. However, in real terms, they have due to inflation over this time frame. Keep in mind that these returns are not including dividends. And currently Ford pays out nearly a 4% dividend yield. So Ford is trading about 60 cents below their 52-week low, which is down more than $15 from their 52-week high. A little under 3% of their shares outstanding are currently sold short, and Ford is a large, well-established American business. They have a $46 billion market cap. So for some background about the business, Ford Motor Company manufactures automobiles under its Ford and Lincoln brands. In March 2022, the company announced that it will run its combustion engine business, Ford Blue, and its BEV business, Ford Model E, as separate businesses, but still all under the Ford Motor Company. The company has about 12.5% market share in the United States, about 6.5% market share in Europe, and about 2.5% market share in China, including unconsolidated affiliates. It's expected that their market share will increase as inventory improves coming out of the chip shortage. Sales in the United States made up about 64% of 2021 total company revenue. Ford Motor Company has about 183,000 employees, including about 56,000 United Auto Worker employees. Ford Motor Company was incorporated in 1903 and is based in Dearborn, Michigan. For our fundamental analysis today, we are going to be performing the Select 6 analysis, taking a checklist-style approach of 6 standard financial metrics to come to a holistic and beginning understanding of Ford based off of their business fundamentals. So this analysis is still evolving and it's an opportunity to learn in public. It will continue to improve and get better over time. So with that said, let's get right into our analysis. Starting off with metric number 1, we want their average return on capital over the past 5 years to be above 14%. So the average publicly listed business earns about a 7% return on capital. And over the long run, over the course of decades, a stock is going to return approximately what its underlying business returns, and these underlying business returns are captured here by return on capital. Ford had declining returns on capital headed into 2020, and after the COVID-19 pandemic struck, the company actually had negative returns on capital in 2020. Since then, their returns on capital have rebounded back strongly, although they are still below average. At the end of fiscal 2021, they had about a 5.5% return on capital, and so far, over the last 12 months, they've had about a 6.5% return on capital. So averaged out over these past 5 years, Ford's only earning about 2% return on capital, which is well below that 14% metric we were looking for, and it's also well below what the average business is earning on their returns on capital. So this is going to be an X to start off here on metric number 1. Metric number 2, here we're taking a high-level overview of the cash coming into the business. So we want their total revenues, net incomes, and free cash flows to have grown over the last 5 years. This metric is all or nothing in nature. Either all 3 of these are going to be up for a check, or if even one of them is down, this entire metric will be an X. In the last 5 years, Ford has seen their total revenues decline. They have seen their earnings pick up. Their earnings have more than doubled over this time frame. However, they've been pretty inconsistent overall, with a variety of different things passing through their earnings in a given year. And most importantly, we've seen their cash flows decline, which is not great because cash flow is really the lifeblood of any business, and a business's abilities to produce free cash flows now and until Judgment Day, discounted back by some reasonable rate of interest, is ultimately what that business is going to be worth. So overall, 2 of the 3 things we're looking for here were down. This is going to be another X on metric number 2. Metric number 3, here we're building off of the previous metric, but we're looking at the business on a per share basis. So we're taking the perspective of an individual shareholder in the Ford Motor Company. Here we're looking for 5-year earnings per share growth, and we're seeing just that. Their earnings per share have more than doubled over this time frame. That's almost exactly what their earnings have done over this time frame. They have technically diluted shareholders, but it's been pretty marginal at only 1% shareholder dilution during this time. So again, this is going to be our first check here on metric number 3. Metric number 4, here we're looking for free cash flow per share growth over the last 5 years. Unfortunately, Ford has not been able to grow their free cash flows like they've been able to grow their earnings. While it is nice to see that they produced positive free cash flows per share in all 5 years, overall their cash flows per share are down over this time. In fact, year to date, these are even farther down. They're now below $2 per share. So this is going to be another X here on metric number 4. Over long periods of time, we want to look to see that a business's earnings and free cash flows about balance out. Here, they're pretty all over the place. However, 5 years isn't necessarily a long enough time frame to get an accurate sense there. We would want these things to approximate one another over farther extended periods of time, such as 10 years plus. So to recap where we stand currently, Ford has only checked the box on 1 out of our first 4 metrics. Metric number 5, here we want their net debt, which is long and short-term liabilities minus cash and short-term investments, to be below the amount of free cash flow that Ford has produced over the past 5 years. Currently, Ford has $102 billion of net debt. Ford has a lot of debt, but we want to see how it compares to their cash flows. So when we tally up their 5-year cash flows, they've only produced about half of what their net debt currently is. They produced $56.4 billion of free cash flow in the last 5 years, which is about half of what their current net debt position is. Thankfully, since 2019, Ford has been paying down their debt over time. However, this still is a very high debt load relative to the free cash flows that they're generating from this business. And with continued investments into technology and electric vehicles going forward, Ford is likely going to have to keep reinvesting a lot of capital into their business. So ideally, as a long-term investor, we would want them to be further reducing this leverage if possible. Typically, auto businesses are going to have a lot of debt on their balance sheets, given the nature of the business, but we still don't want to be investing in overly levered businesses. The reason being for this is that during economic downturns, it's these overly levered businesses that are going to be at the greatest risk of performing poorly, given their potentially precarious financial positioning. So this is going to be another X here on metric number 5. So far, again, we are only 1 for 5 on our first 5 metrics. Finally, the big metric of them all, metric number 6, we want Ford's average free cash flow to total enterprise value yield to be greater than 5%. If this is the case, this will give us a slight risk premium to the risk-free rate and give us a reason to potentially be interested in the business. So we're using total enterprise value here because it gives us a more economically realistic picture of the Ford Motor Company than market cap would alone. So total enterprise value is going to incorporate both market cap and their net debt position. As we learned in the previous metric, Ford has a lot of net debt. While their cash flows look very attractive compared to their market cap currently, again, that's not necessarily reflective of economic reality, and total enterprise value is going to give us a better picture here. So currently, Ford Motor Company has a $148 billion total enterprise value, and we learned that over the past 5 years, they produced $56.4 billion of free cash flow. So that means that in an average year over this time, Ford is producing $11.3 billion of free cash flow. And when we divide their $11.3 billion of average free cash flow by their $148 billion total enterprise value, that gives us an average 5-year free cash flow to enterprise value yield of about 7.5%. That's going to be higher than that 5% metric we're looking for. This is going to be another check here on metric number 6. Also to note, over the last 12 months, their free cash flows have come down quite a bit. They've produced about $6 billion of free cash flow in the last 12 months. to find a current free cash flow to enterprise value yield, when we divide their $6 billion of their last 12 months of free cash flow by their $148 billion total enterprise value, that is only going to give us a 4% current free cash flow to enterprise value yield. So that is definitely something you want to consider here to determine whether their cash flows are going to continue to be below their 5-year averages or if they're going to be able to rebound from that. Then finally here we're looking at Ford's dividend profile. So Ford currently has about a 4% dividend yield. It's easy for people to blindly chase dividend yields and think that that's the end-all be-all for a business. However, it's important to stop and look under the hood of a business to determine if a company's dividends are well supported by that business's abilities to produce free cash flows. In the case of Ford Motor Company, in all 5 of these years, they produced more than enough free cash flows per share to comfortably support this dividend. However, given the business's high debt loads, it would seem like a lot of this free cash flow is going toward debt repayment. So the business has been trying to both pay down debt and then reinvest back into the company to fuel their transition into electric and autonomous vehicles. So in summary, Ford Motor Company checks the box on 2 out of 6 metrics. Their earnings per share have grown over the last 5 years, and currently based off their average cash flows compared to their enterprise value, they're giving us a potentially attractive risk premium to the risk-free rate. However, we learned through our analysis that their current free cash flow to enterprise value yield does not necessarily provide us with that same attractive risk premium, and that while the business's returns on capital have rebounded since going negative during the COVID-19 pandemic lockdowns, the business is still only averaging pretty paltry 2% returns on capital. Their revenues have also declined in the last 5 years, and their free cash flows are down at the same time. Then a big one is that we learned that the business has about twice as much net debt as the cash flows that they've produced over the last 5 years. It would seem like Ford is employing quite a lot of leverage in their business right now. We also learned that the business is producing a ton of free cash flow relative to the dividends that they're paying out to shareholders. However, a lot of their free cash flow, as it rightly should, seems to be going back to debt repayment. So keep in mind that this type of analysis is a holistic beginning starting point to help you determine whether it's worth your time to dig in deeper and learn more about Ford Motor Company. This analysis is not financial advice, and it is not a buy or sell recommendation of any security. Before making any sort of investment decision, please consult with the properly licensed and registered financial and legal professionals. If you're interested in learning more about Ford Motor Company, I would highly recommend that you dive into the company's historical 10Ks. Ford is a very established, well-entrenched American company, and they have annual reports available dating back to the early 20th century. One thing that both Charlie Munger and Warren Buffett did about GM, one of Ford's main American competitors, was they actually went back and read all of the GM annual reports, even through the period during World War II, where the US government did not legally allow GM to produce new motor vehicles, and they were strictly producing vehicles and airplanes for the US war effort during World War II. I'd imagine you'd find a deep history similar to that here by looking at those historical 10Ks for Ford. After you've done that, it would also likely be worth your while to read through some of the recent quarterly earnings call transcripts to get a more nuanced understanding of the business on a quarter-to-quarter basis. All of this further research will provide you with a deeper understanding of the Ford Motor Company. It'll help you understand the environment that the business operates, the potential risks that the business faces, the opportunities that lie ahead, and you'll get a sense for how management is approaching capital allocation. So ideally, as a value investor, you want to come to understand a business as if you owned 100% of it, and you can truly understand the essence of that business and know all of the business's ins and outs that matter. So with that said, that's it for today's fundamental stock analysis of Ford Motor Company. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Thanks for learning about Ford with me today, and have a great day.